You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/the Options Insider, or via questions at theoptionsinsider.com. The Options Insider Radio Network is sponsored by Fidelity Investments. Fidelity's Option Trade Builder tool can help you confidently build an options trade in 3 simple steps. Just choose a strategy, select a contract, and then review the benefits and risks of the trade. Learn more about Option Trade Builder at fidelity.com/options. Options trading entails significant risk and is not appropriate for all investors. Certain complex option strategies carry additional risk. Before trading options, contact Fidelity Investments by calling 800-544-5115 to receive a copy of the characteristics and risks of standardized options. Fidelity Brokerage Services, LLC, member NYSE SIPC. Bitcoin, Ether, Ripple, Litecoin, and more. Cryptocurrencies and other digital assets are taking the financial world by storm. This exploding market provides everything a savvy trader needs: volatility, volume, and liquidity, provided you know how to find it. That's where we come in. Welcome to the Crypto Rundown. Each week, we'll break down the latest trading activity, trends, and developments on everything from coins to tokens, futures, and even OTC options. If it's moving the crypto markets, then you'll find it on the Crypto Rundown. The Crypto Rundown is brought to you by Acuna Capital. Known as the new wave in tech and trading, Acuna is a leading derivatives market maker in traditional asset classes. As one of the first trading firms to make markets on Bitcoin futures, Acuna is also proud to be an innovator in the cryptocurrency space. Through a collaborative flow of knowledge between developers, quants, and traders, Acuna designs and implements their own low-latency technologies, trading strategies, and mathematical models. To learn more about our rapidly growing firm, please visit acunacapital.com. Now it's time to dive into the exploding world of cryptocurrencies and digital assets. It's time for the Crypto Rundown.
All right, everybody. That music means it's time once again for the Crypto Rundown, the program here on the old network where we break down the amazing, turbulent, volatile, action-packed world of cryptocurrency. So Bitcoin, of course, but also Ether, XRP, Litecoin, all your favorites out there in terms of all the action across all the various platforms, even on the futures, the OTC options. We'll break it all down for you. My name is Mark Longo from the OptionsInsider.com, as well as, of course, from the ever-exciting, at least we hope so, Options Insider Radio Network. The boys from Acuna are off trading it up over there in Sydney this week. But don't worry, I'm not alone here on the program. No, not by a long shot. I'm pleased to have a great guest to join me. So let's kick it off with our inaugural Crypto Hot Seat segment.
Forget about cold storage. It's time to turn up the heat on thought leaders from the world of cryptocurrencies and digital assets. It's time to take their place on the Crypto Hot Seat.
All right, everybody, welcome to the inaugural edition of the Crypto Hot Seat, the segment where we welcome on guests from throughout the world of crypto trading and proceed to pick their brains for the benefit of you, the listener. And it's only appropriate that we kick off this segment with our next guest. He's an old friend of the network. I am pleased to be joined by Mr. Tony Saliba, the CEO over there at Mercury Digital Assets. Tony, welcome to the Crypto Rundown program, sir.
Good afternoon, Mark. Thank you.
You and I have to stop talking so frequently. We were just on a panel last week together. So I guess if you didn't get your fill of me last week, you're getting it this week, Tony.
Never enough. Never enough. How are you today?
Good. I am great, and I'm glad you could join us on the program. And I wanted to have you on as our inaugural guest on the show here because in a tangential way, you are somewhat responsible for this program. If you recall, I think it was about a year ago when you were first launching all of the Matrix endeavors there, when you swung by our studio, and it was at the height, of course, crypto, Bitcoin was just coming off the highs of 20,000, Q1. Bitcoin was on everybody's lips, everyone's mind. And I think at the time I jokingly asked you about crypto because it was kind of the hot topic. And it was really just a joke. I didn't intend for you to really have a response to that question. But the depth of your response and the degree of your enthusiasm about all things crypto really gave me a moment of pause. And I thought maybe I should reconsider my stance on all of this crypto stuff. So lo and behold, roughly 10 or so months later, here we are on the Crypto Rundown program. I think it's only appropriate to have you back here, Tony. So I'm glad you could join us here on the show today. Because it's your fault, really, is what I'm saying.
Mark, I apologize and am flattered both at the same time. Thank you.
You've lured me to the dark side of crypto. But maybe let's start there, because I think that's kind of interesting. I'm curious obviously for our listeners, maybe let's start, give them a little bit of an overview of what it is you guys do at Mercury Digital Assets. And then I'm curious, I think a lot of our listeners are too, what is it that lured you to the dark side of crypto? Because obviously you have a lot of things going on in the options space. Mm-hmm. It's not like you're bored. So no. What is it that lured you to crypto?
Well, so when I was with ConvergeX, our head of research, Nick Colas, started writing about Bitcoin like immediately in 2009. And since I read everything that Nick and his team published every morning, I, by accident or de facto, started reading about Bitcoin, this new frontier. So very much from the beginning, I immersed myself in it. And within 6 or 7 months, I got it, and I moved on back to options and left it for a good half a decade and missed, most of the move myself. But then in early 2017, when Bitcoin started to really move into the high hundreds, maybe around $1,000 a coin, we started taking a look at it again and got involved with in the OTC space. And I guess just the way I've always looked at things, or at least over the last 20 years, I see human action as workflow that could be automated. And I immediately started to see all of the similarities and differences between the option space and what we built with Broker Point at Liquid Point, which is, still the dominant workflow automation for the sell side in options. And we went to work, Jordan Naylor and myself and Joe Piotrowski more recently, since he's left Liquid Point, to build out in next-gen technology, HTML5, a sell-side workflow automation that is a liquidity sourcing and order management system. So what Mercury offers is a platform called Beacon. We're in the process of connecting to all the major names, Kraken and Coinbase, Gemini, and SJMX, the latest newcomer, which will be the first regulated spot exchange in the country, the San Juan Mercantile Exchange, and their dark pool, which launches in March. So we've got a few dozen clients on the system and lining up many other firms that need to source liquidity and route their digital assets. We have multiple custody solutions. And so I've been doing double time in 2018. It's deeply integrated with Matrix on the broker-dealer side. So once CBOE and the other listed exchanges start trading options on it, you have a Matrix plugin, and you can trade the underlying and the options right on the same screen.
Well, Tony, I've been giving everyone here in the early episodes of the show a chance to weigh in on a very tumultuous year for crypto, I think, to say the least. It's the year where it really came on the radar for a lot of people, or even people like me. I was always aware of it, but I hadn't really paid a lot of attention to it until just the vast majority of our audience continued to hit us up on a regular basis about all things crypto, where I realized there was clearly a lot of mind share, a lot of interest in this product area. It was certainly worth a second look. But I'm curious, looking back on this year, the frenzy, the race to launch the futures at the end of 2017, the hitting of 20,000, and then kind of everyone getting into it and the evolution, the flux. Walk us through, what's your take on this kind of roller coaster year of 2018 from a crypto perspective?
Well, so we participated in some of those moves and definitely saw the fear and greed going on, but mostly focusing on trying to build a piece of the, all too overused phrase ecosystem with some infrastructure. Okay. And that, with our heads down and sticking to our knitting, we really, we're looking at what's going on with Bitcoin particularly, but the space in general as another asset class that is gaining wider acceptance, in terms of capital markets professionals. Over the year, I've met with dozens of firms that, Matrix does business with, that has a side, and even some names that publicly the CEOs are disavowing any interest in the space, have, skunk works on the side, getting ready to handle the demands of their client base. So it was obvious to us the same shops that were trading options on, one side of the desk and maybe futures and equities on another side or two sides of the desk were soon going to have a man or two or woman or two trading cryptos as the customer demand rose. So we decided we needed to build this piece of the infrastructure to serve sell side shops and liquidity providers who are connected to be able to do the same thing that we did in options. I mean, necessity is the mother of invention to me and to us. And when it's said and done, the ability to source liquidity, we never thought that the typical phone down to the floor to get a quote in a illiquid stock name for an option spread was ever going to be bettered. And along comes heat and then broker point. So we're being embraced, to a man every time we show the system and saying, oh, this fits. It's sort of a multidimensional puzzle piece in that it fits the workflow, but it's also appealing to the capital markets or the listed side of the institution that says, okay, this makes sense. You've got, full compliance, full reporting and everything. So it was an ability to take what we've done before and to do this for this new, not so new, but new to the capital markets and institutions. Because for the most part, the solutions that were out there are e-commerce, websites that are fine for retail, but, sourcing liquidity for anything greater than 1,000 coin became a work of art, basically. So that, the year was a roller coaster. The volume, although the price dropped, the actual number of trades increased. The order flow in terms of numbers of orders increased. And we just think that, lower price is fine and easier for broader adoption.
Well, Tony, one of the other reasons I really wanted to have you on the show today is because you're playing in a space that's very important to the crypto markets right now. We're hearing from a variety of different outlets and a variety of different people, different thoughts, different hot takes on the institutional uptake of crypto. Some people saying, oh, crypto's done with institutions now. Institutions are washing their hands of it. The sell-off has spooked them. They're moving away from it. Others saying, no, this is an opportunity. The institutions are kind of reinvesting and doubling down on that platform. I know you've said to me in the past, you kind of just mentioned it again, that institutions are saying one thing and then doing very much another behind the scenes. I'm curious for you, who's playing in this space every day, is that still what you're hearing out there? Are you still hearing a lot of enthusiasm on the parts of these institutions to come in and say, hey, we really are intrigued by this new asset class, and maybe some of the recent volatility, some of the recent sell-offs, has that dampened their enthusiasm, or are they still all in when they're talking crypto to you, Tony?
Great question. And I'll say, Mark, that it's not monolithic. I mean, there are some that literally September, October timeframes when, Bitcoin, broke 5,000, and those that were on the fence decided to take a step back and wait. It's kind of a spectrum. There are those who were being pushed by their client base but hadn't invested yet, all the way to the other end of the spectrum that took the lead and invested heavily to be ready, and they're saying, okay, well, our products or our solutions are almost through the chute, so we're not going to let this drop in price delay us. I would say it's been separating the men from the boys, if you will. We have serious players who have solutions on the launch pad for custody, for your typical prime brokerage users, okay? And they're not being deterred whatsoever. That's where where we traffic. And we become, hopefully we become, and other shops that might, do what we're doing, becomes the glue to connect these folks together. Okay, having said that, I think that the launch of other crypto products, for instance, the ability to pay more readily at the cash register, is going to help broaden the adoption. So with the Lightning Network, which is being built, when that actually goes into production, will assist consumers to utilize crypto as a currency, right? So you have a lot of the players are undaunted, okay? There's still large trades that are having a problem getting filled without, plowing through the offer or the bid. So there isn't one uniform place to source liquidity and come together. Mostly there are OTC desks, and they'll take down your trade and tack on some edge. So we see a move to continue in the space, and more of these products and exchanges that are more mainstream will help cement that.
Speaking of products, obviously Bitcoin gets all the headlines, gets all the attention, and rightfully so. It is the vast majority, 2/3, 3/4, even more of the market cap out there in any given period. But I'm curious, the institutions that are coming to you, are they solely interested in Bitcoin? We've had the Acuna guys on here. They said, they've been making markets and ETH options and other of the altcoin products out there as well. Is there interest in those, or is it monolithic all in on Bitcoin right now?
Well, so far for us, we've been focusing on Bitcoin, but Ether is right behind that, and then it drops off significantly, mostly under the heading of, well, we'll be able to trade others or handle others if the demand is there. We just want to get it right first with BTC. So, you have a bifurcation between tokens that are being treated as would be securities and those that are utilities. And the exchanges that, like for instance, San Juan Mercantile Exchange, they'll trade utilities. Being registered, they're going to hopefully give some backing and support to typical capital markets customers in whatever they want to trade that has an interest and like a rapid launch. I know that Coinbase continues to add more pairs, but I look at Bitcoin as mainly it's the e-cash proof of concept. So that's something that is fairly bulletproof, and as long as that's being used by firms to pay miners, that's going to be a mainstay, I think, for a lot of the institutions.
Tony, hopefully they're not coming to get you here. I can hear the sirens in the background.
They'll be coming by you soon.
There you go. Yeah, something's burning down behind you there. Hopefully they'll let you stay in your office a little bit longer. Tony, one of the things that's fascinated me, and probably you as well, you have an even longer perspective in the business than I do, but watching just the massive and rapid adoption, particularly in our neck of the woods, the options and derivative space, to all things crypto. It's like in many ways like a bomb went off in the option space. There's been a lot of, shall we say, brain power, skill sets, other things lying somewhat fallow, maybe sitting by the wayside for a while here in the options and derivative space. We've seen a lot of ventures like the Floors and Open Outcries slowly dwindling over the past decade, and people looking to apply those skill sets in other ways, maybe waiting for a new product, something new to come along that could really shake the foundations and provide a new ecosystem. And all of a sudden, crypto lands in that space just like a bomb. And it's been really fascinating to watch. I've talked to a lot of guys who've been in the option space for quite a while, who've made analogies to, this is like the early days. This is like the 70s and early 80s on the SIBO when things were wide and you could actually make a market trading in between that and make a living doing so. And it's not as tightly regulated. We see in the listed option space now things are effectively a penny wide in the big names, and they're very tightly regulated. And so it squeezed a lot of the viability out of that for a lot of people. And also, it's kind of been fascinating for me to watch the interplay between let's say, the experienced derivatives mindsets that we have out there who are used to the capital market space, used to derivatives and how that scene works, and the crypto enthusiasts, shall we say, who come to it outside of the financial markets, come to it from a purely crypto/technology, maybe a little bit of anarchist mindset there as well. And watching these two very different mindsets come together and the meeting of the minds, sometimes they clash, sometimes they work together and create some interesting products. So this whole evolution has been fascinating for me. And you're a perfect example of it. You've been in the derivative space for a while, and now you're all in on crypto. Has it been as interesting for you, as surprising for you to see just the evolution of these two worlds coming together, or did you expect this all along?
No, I totally has been interesting. I actually been saying all along this is the exact inverse of the dot-com bubble, where those players that you mentioned, the anarchists, the little guy, some of my staff are just 20-something enthusiasts who made a lot of money, being hodlers, and then the smart money came in the thousands or the tens of thousands price-wise for Bitcoin, and kind of took out a lot of the small guys. So it was exactly the inverse of what happened in the dot-com bubble, where all the swells offloaded to the great unwashed as they came in later and bought based on click-through valuations and all the other things that Yahoo at 800 was yielding. So this is exactly upside down. Now, having said that, there's some real reasons for a cryptocurrency, and the real enthusiasts will say this is, hey, the internet is big enough, it needs its own currency. This is the currency of the internet. Okay, well, I've always said it's one thing if I'm wrong and I lose money trading options or stocks or futures, but I don't have a fear or a risk that somebody's going to steal my money. And that was one of the big problems, for digital assets, where the prone to hacking and somebody stealing your wallet or stealing some coin that you're custodying at an exchange. So once that storage situation became, a thing, and people were aware that that wasn't the best place to leave your inventory, I think it started to change the landscape, and it has been changing the landscape. And the big problem that's being solved and has kind of made the big move during 2018 was custody. So you get that solved, and the big players, like Fidelity and some others that have, made the move to work on a custody solution for their institutional clients, Kingdom Trust or Signature Bank. Those solutions then start to bring the safety. And yeah, I do see a lot of similarities to the 70s when options were being traded, in that they were hard to understand. There were a lot of moving parts, and it wasn't just as basic as stocks or even futures that went up and down. And there were other components to digital assets that you had to be aware of and able to play. So, and there's big demand. I mean, it's a cheap, P2P payments network, for instance, or sensor resistant digital gold. There's a lot of different ways to look at the medium. Unfortunately, also private and anonymous darknet currency, or something that the regulators are fearful of, money laundering and things. But those things have, with complete KYC and AML, that stuff starts to get flushed out of the system, at least in the States.
Talking to the institutions, obviously there's a knowledge gap and maybe concerns over liquidity and things, but I think you kind of just hit on one of the big stumbling blocks. That is indeed the cybersecurity. I've often only half jokingly referred to crypto as it's the bearer bonds of the 21st century. You used to watch an old James Bond movie or whatever, and someone's on the train with a briefcase handcuffed to his hand, and it's full of bearer bonds because the guy can just steal it and run away with it. Now the new version of that is, of course, the guy sitting on the train with a jump drive full of $5 billion worth of crypto in his pocket. So there certainly is an attraction to the hackers out there, because they can actually quite literally steal the funds. There's no other intermediaries between them. So is that still maybe the number one stumbling block for the large institutions? I mean, we just saw, Cryptopia this week, another hack, one of the first big hacks of 2019, stealing some assets. So is that still the pushback you're getting from institutions? Is it the security issue?
Absolutely. And the solutions that are out there, the so-called, routing and execution platforms, haven't addressed that for the most part. And most of the ideas that raised a ton of money, a year or 2 years ago that haven't, been brought to market, were, ideas and only ideas and vaporware. And that's, what, in talking to one of the custody providers that'll be coming online this quarter, has said, there's so much of the landscape or ecosystem infrastructure that has to be built. If somebody like ourselves could come along and provide that, it makes for a big puzzle piece to, keep them going and advance their, advance their needs. So hacking, people forgetting their keys, and just the an entire aspect of that bearer bond, which I love that analogy component, is being institutionalized. And the purists will say, but if you start to centralize it, you lose the beauty, of the decentralized marketplace. And really what we found, and we were demoing our platform to one of the big banks, and this was a little while ago, and they said, wow, you basically are being able to deliver a decentralized, centralized system. So each group can operate in their own fractal sphere and connect only when they want to connect to one of the other liquidity sourcing or funding pools. And then, well, we don't call them exchanges, we call them venues, execution venues. So you can go, because we believe that exchanges are regulated, and exchanges, have a certification or a designation from a regulating authority. But in that vein, you can start to see the roadmap of that group may have it right and that group may not, but I won't connect to the one that doesn't. I'll connect to the one that's doing everything, completely in line with regulatory compliance, for instance. So no dark money there. And that's basically been hitting all the points for the institutions. That and education, that in educating their staff and their client base on how this stuff works.
Well, you and I, Tony, can obviously talk about the past and future of crypto for many hours, but we have to keep rolling. It's time to do the Bitcoin breakdown.
It's time to explore the latest trading activity, trends, and developments across the world's leading crypto market. It's time for the Bitcoin Breakdown.
All right, everybody, welcome to the Bitcoin Breakdown, the segment where we break down what was going on in this past crazy, tumultuous week. And every week so far in this new year has had new interesting developments in the world of crypto coming into showtime here late in the afternoon on Monday. Tuesday. We had a holiday yesterday. I'm off by a day, Tony. Tuesday, the 22nd. We're seeing Bitcoin come in right around 35.77 or so, up about a little over 1%. We're seeing similar levels out there on the futures, the CME 35.85. But it has been a bit of a tumultuous weekend. It's also an interesting period to be watching all things Bitcoin. We're kind of currently in the midst of the longest stretch of, I guess you can call it, range-bound trading activity in Bitcoin in a while, in about 3 months, since late October. We're seeing it kind of bounded by this around 37.5 or so on the upside and around 3,500, threatening 3,500 on the downside. And it seems to be vacillating between those two goalposts. In fact, we saw that played out again over the weekend. We had a volatile weekend where we saw Bitcoin rallying, almost threatening that 37.5 level again, and then almost immediately in a 24-hour period coming back off a couple of hundred handles back down to about 35.5 as well. So that range was tested yet again on the weekend, at least for the near term. It seems to be holding. Of course, people who are out there who are enthusiasts of all things technicals on crypto also point to the fact that the last time we saw these periods of range-bound kind of consolidation, it ended with a bit of a breakout to the downside. So maybe that's not a welcome development for all the crypto bulls out there, but still interesting stuff. Nonetheless, of course, with all the recent tumult, we've seen about roughly $6 billion taken off the market cap of global market cap, I should say, for all cryptocurrencies. That was coming off the weekend. We see some of that coming back in here again today, which is kind of interesting. And Tony, I'm curious for you. This has been an interesting start to the year over there at Mercury. I'm sure you've seen a lot of interesting requests and queries coming in. What are you hearing from them in general? We talked to the Acuna guys. They said the put skew is where all the action is right now out there in Bitcoin options that they're making out there. Is that the same with your clients? Are they primarily interested in puts? Are you seeing any interesting developments going up in the recent weeks?
Yes. The number one outlier is that mostly towards the end of last year, we had for the first time buyers willing to pay a premium. Okay. So I would say the hallmark of 2018 was transactions at a discount, sellers willing to forego market prices and pay fees and such to liquidate. And really now there's been a much stronger, significantly, on the buy side, where we've been lining up orders to just participate and willing to pay spot plus fees. And that's really didn't see any of that at all during 2018.
So maybe a little sign that the crypto market's grown up a little bit there.
Well, yeah, I would like to think that these deep discounts or premiums go away and people trade near spot, but try to buy 2, 3, 5,000 coins, and you'll move the spot prices 5 to 10%, unless you arrange something with one of the OTC desks, which each of them have their own sets of risk and different payment styles and limitations. So somebody that just wants to put that kind of capital to work, needs to pay up, and that's something that we see that's going to change once there's a regulated, fully regulated exchange.
Yeah, walk us through that, because that's a concern. Obviously, we're hearing a lot right now, as well as in addition to the cybersecurity, the liquidity is out there. We joke about the option space being fragmented, but the crypto space is a whole other level of fragmentation. So let's say the proverbial institutional customer comes to you guys and says, I want to pick up 1,000 Bitcoin here. How difficult is it still to really execute those large blocks? And walk us through, the process you guys have to go through to fill these types of orders.
Well, currently you need to source both sides, and both sides typically will come with an agent or a representative, as they might call it in this space, a mandate, somebody who works for the buyer, the seller, and then a circuitous process of getting to know each other happens. If you're on the same platform, if you're working through Kraken or Etana, or there was a time Volantis, you would line things up. Or Noble Bank, blew up and is no longer transacting. But you would go through a circuitous process of lining up the proper KYC and AML, proof of coins, proof of funds, and then transacting some portion of the total amount initially, just to get a taste, to prove out that the coin was real, and then you would move through that and possibly trading 10,000 coins would take all week, for instance, and you would do it sparingly. Some of the OTC desks would take you down, but they have DVP, which isn't always acceptable to the other side, and you would basically be at risk with them for a short period of time, which in the big scheme of things was never really was a problem, but convincing one side or the other to go there was. With a regulated exchange associated with a custody solution and or bank, imagine your prime brokerage account, pick one, ABN AMRO, Goldman, EDF Man, and you could trade everything in your same account just like you do now, futures, options, equities. You may not get cross-margining, but you could still do it and they would handle it. That's what a regulated environment would bring for capital markets people. And that's why there's a scramble for certification, regulatory approval by some of the venues today.
Think about what you just said there for a second, Tony. Imagine if you said that in the listed options or derivatives world. Let's say you put in an order right now to buy 1,000 S&P futures, and your broker came back to you and said it's going to take about a week. Can you imagine what the feedback on the other end of the phone? They would hang up and they would obviously go somewhere else because that person was insane. And yet that's kind of a regular part of the execution in the crypto space. Isn't that just kind of mind-boggling to think of that?
Yes. Well, I mean, think about this. So one of the big deterrents or factors is that, where did the coin come from? Is this dark money? Is there money laundering being involved? What's the provenance of the coin? And also, banking regulations don't allow you just to trade to move extremely large amounts of U.S. dollars freely in and out. Even the big boys have some limitations, and that they need to go slowly, and you trust them, and then you transact over a number of days where they'll try to hold your price, and when it was really super volatile, you were at the whims of the marketplace. But as much as I'm against regulation in general, because I think the listed options market and equity market is overregulated, as we talked last week, without the right, they're killing a fly with a sledgehammer, and it doesn't really accomplish all that was Dodd-Frank was supposed to accomplish in terms of risk and what happened in the 2008 meltdown. In this case, a little regulation. There's a good amount of regulation so that players, it's one thing to trust me or you, or I trust you, but it's another thing to just say, well, I know that if I clear Mark's, through Mark's Prime, I'll be okay. And really, the OCC takes care of a lot of this fungibility situation that you don't have in terms of the Bitcoin space, but eventually you'll have that, and that's where I think the standardization and regulation. I mean, look at all the time and ink that's been spent on stablecoin because of the volatility, spooking people that want to use this as a medium of transacting. And Walmart, can't take Bitcoin because if I don't get it, converted quickly, I could be up or down 10%. I mean, that's not so much the case today, but it's still, 2 to 5 and sometimes 10% each day. So stablecoin has been a point of discussion, and I think it's an interesting medium for those reasons. But a little bit of regulation will go a long way to give people comfort levels.
I know how hard that is for you to say, because I know you're not a big fan of regulation in general. But that kind of shows what we're looking at, right? I think anyone will think a little bit of regulation is better than complete. It was born in the anarchist ether, pun intended. So a lot of people want to keep it that way. But we've seen, obviously, it can't be a functioning actual financial marketplace without a little bit of certainty out there. And so, I know for you, it must be hard to say that. And for a lot of people out there who are very anti-regulation, it's hard to say that because we've seen how far that rabbit hole can go in spaces like the options world. Once you open that door, once the genie's out of the bottle, it's hard to say where it will stop. But a little bit would probably go a long way, certainly in the crypto and certainly in the Bitcoin space. So looking here, speaking of a little bit, it has been a little bit of volume. It's been decent, actually pretty strong volume coming over here. The weekend was strong, which is rare. Usually the weekends recently have been kind of light, but in Bitcoin at least it was strong. And looking at the futures right now, today a very strong day out there on the CME future, almost 7,000 contracts in the Jan front month, almost 8,000 total going up on the day, which is probably about 2x their other biggest day over the past week, which they did almost 4,000 back on January 15th, back around the time of our last show. So it's been kind of quiet since then, but today rocking and rolling as the coins have been moving around. Speaking of all things options and crypto, this is a story that's near and dear to both of our hearts. I'd be curious to get your thoughts on it, Tony. We're seeing the folks over there at LedgerX, obviously big players out there in the crypto and in the burgeoning crypto derivative space, launching what they're terming, they're not shy about it. They're not shy about where their inspiration is coming at all. They're calling it the Bitcoin Fear Index. Effectively, their version of the VIX, they're calling it the LedgerX Volatility Index, ticker symbol LXVX. And in their own descriptions, they're calling it the Bitcoin Fear Index, just like the VIX. They're not mincing any words where they're copying this. Obviously, the methodology is going to have to be different. Otherwise, the SIBO lawyers will come knocking. They may come knocking anyway, just given the way they're describing this thing. They're quoting it now, saying they're LXVX, which doesn't really roll off the tongue, LXVX. I mean, you have to maybe truncate that a little bit. It's down about 20% to about 68, which is the point we've been saying for a while, that Bitcoin has this perception of being uber volatile, and yet the reality, not last couple of weeks, a month notwithstanding, not really so much. In fact, in November, it got down to around a close to 20% implied volatility out there in a lot of these products. But it's not a tradable index, so in many ways it is mirroring the VIX completely. When the VIX was launched, it was not a tradable index or a tradable product either. It's just out there for an informational perspective. But still, kind of interesting, Tony, that we're seeing this. Maybe this is another sign we were referring to earlier of the maturation of the crypto and indeed the crypto derivative space, that we now have our own fear index. Or is this just some blatant marketing and copying here of a hot product?
No, actually, I think that, one of the big factors that would lead to success and adoption is the proliferation, life cycle, and death of the ones that don't make sense of these various products. In that, if this index catches on, or an ETF, there's a couple ETFs that are waiting for the government shutdowns preventing them from being ruled on right now, but there's a number of products that could catch on, and I think there's an avenue for these products, and if they can. I mean, the beautiful thing about options is the OCC. Obviously, they have the fungibility and the short against the box capabilities of stocks. So now you have this whole ecosystem. Whether or not the same components come in to the crypto space, it takes pioneers, entrepreneurs like this. Some of the stuff is just throwing spaghetti on the wall, see what sticks. But better mousetraps, better threading the needle between capital markets and anarchists is really what I think a lot of brain power is going in on. And really, it's the blockchain that makes the difference. I like the fact that LedgerX is doing this. I don't know how, what kind of adoption they're going to really get from it, but it's something that, LXVX is something to watch, at least.
Speaking of brain power and things to watch, we have a lot of brain power in our audience, and they hit us up with all sorts of crazy questions. Let's get some of those. It's time to check your crypto questions.
You've got questions about crypto. Who doesn't? It's time to find out the answers to your crypto questions.
All right, everybody, welcome to the Crypto Questions, a portion of the show where you guys take the reins, your questions, your comments. I know you have many of them. We all do. So let's see if we can answer them together. Let's kick things off. Actually, this is a good question here from Insight 3, something we didn't get to when we were chatting earlier, Tony, but another big question everyone has about the institutional market. Insight 3 asking, is the SEC approval of a Bitcoin ETF, is that the missing link for the institutions when it comes to Bitcoin? So, we've heard a lot about this. We talked about cybersecurity. We talked about liquidity. But the other big issue, stumbling block for a lot of these firms is they're waiting for another big product, to come in and drive a lot of volume. We saw that happen in the volatility space very famously. The universe of ETPs exploded and VIX volume exploded as a result. So people are maybe hoping that the ETF will be the next big thing. Obviously, last year, the SEC not really in an approving mood for a lot of these new products. So we didn't really see it. But I'm curious for you, Tony, hearing and talking to these firms, are they all kind of waiting for the ETF to come? And also, what are you hearing on that front? You said with the shutdown, they're delaying. You think it's just a matter of time once the shutdown is over, we'll see the approval of some new products?
Well, I wouldn't say that all institutions are waiting for that or even care about that. That I don't know all, but I would say that some of the shops that we've talked to, that definitely would help, and that definitely is something that, fits into their asset class that they can clear and offer to their clients. So, we traffic solely in the spot, and that, just as many people trading VIX would never potentially ever, look to trade the spot of VIX. It's not a good example, but any commodity where you trade the future on it, that you may not actually take delivery of, feeder cattle or pork bellies, right? Okay, so having an ETF is definitely something that would get some of the institutions that we're talking to a little bit more jazzed up because now the spot becomes a completion of a hedge strategy or a general strategy that they could play against the listed ETF. So yes, that's a big deal. Whether or not the SEC reconvening, if and when the partial shutdown of the government actually ends, remains to be seen. I think Commissioner Hester is for it. She's vocal about it, and if she wins a couple more hearts and minds, we should get it. I say why not? Because if it's completely regulated, how it's settled, and what it delivers into can be regulated, and then we're kind of off to the races. And I will say that, like last year, when the marketplace was waiting for approval on a couple, like the Winklevoss ETN or ETF, then you saw people bidding up BTC pretty heavily. You'll see a rally if something gets approved.
Yeah, you're right. We're kind of in this weird catch-22 on the regulatory side where the regulators are saying, oh, the underlying markets like the futures and others aren't quite there yet to approve an ETF on them. And yet, you also have the other side of that coin. Well, how are they going to get there if you don't approve the ETFs? In that little bit of that weird catch-22 mentality. Hopefully you're right, Tony, and that we're just a shutdown or two away from all those new ETFs coming to fruition out there. Well, we kind of answered this one already from Erica. Maybe if you have any additional thoughts on this, Tony. Erica just wants to know, are big firms losing their appetites for Bitcoin after the big drop? It sounds like that's not the case, Tony. It sounds like actually you just said they're actually, for the first time since you've been doing this, willing to pay a premium to get their transaction executed. So maybe that shows a rekindling of interest. In fact, we also saw some data recently from Bloomberg showing that you referred to them earlier. I like that term, the hodlers, the hold on for dear life camp. A lot of those accounts are starting to spring to life now too. The ones they measure that are, I think it's 6 months to 2.5 years that have been inactive over that period. That percentage of them has dropped substantially in the past few months. So maybe there's an argument to be made for the other side. Maybe these accounts are firing to life and there's more interest out there. So are you seeing that, Tony? The big sell-off hasn't really spooked them?
I would say you have tortoises and you have hares, and some of the hares have used the drop in the price and the beat down by some of the public naysayers as a reason to say, not our focus right now. But there's plenty of tortoises. We have over 100 firms on our list to roll out Beacon to, and they range from prop desks to some of the biggest names on the street. During the summer, when Bitcoin started to drop off a bit, you saw resources kind of being pulled back and waiting, although we weren't ready to roll out ourselves. But now that we're ready to roll out, others are saying, okay, we'll fill that gap and we'll take you on. So there's clearly entities that are not going to pass up this opportunity to ready themselves while the price is lower. So it isn't monolithic, but one thing I will say for sure, and I would bet on this, if there's a rally, if there's a reasonably sharp rally of 25 to 50% in the current price, you're going to see a lot of that mindset change pretty drastically.
All right, we'll wrap it up with this one. This comes from Neil's. Neil, he's listening live in our live chat. Says he has a question for another time, but no, listen, Neil, you're listening now. You're asking a question now. We always like to favor our live streamers whenever possible. So if you ask a question in the live chat, you get bumped to the top of the list. That's how we roll here on the old network. He wants to know, how will security tokens affect or perhaps complement crypto? Tony, that's kind of the other side. People maybe think securitized type tokens, maybe a smoother path forward from a regulatory perspective, maybe from an institutional perspective as well. So I'm curious, you guys obviously playing in the Bitcoin camp now, but are you excited by the prospect of all these securitized tokens coming online in the near future? You think this is maybe the next evolution of the space, or are you not that excited about these?
No. Remember, Mark, you were in the business when they still shipped out paper stock certificates, right?
I don't know what you're talking about. I'm 25, Tony.
Well, I remember when WorldCom hit the skids and was going belly up, and I went out and bought a couple $1,000. I think the stock price was maybe 5 cents or a dime right before they delisted it. And I bought a couple $1,000 worth of stock just to order the stock certificates. This is in the dot-com bubble busting time frame, and they first options where I cleared literally sent me a big stack of very nicely printed out stock certificates. I'm sure they cost more per certificate than I paid for the stock. They don't do that anymore. My whole point is that digitizing securities and having digital tokenized stock or equity definitely is the next step. And I believe Ice Nizy and others are moving in that direction so that, think of all the accounting and the forensics that are saved by having all that information on a blockchain. And yes, that's the next step. So it's not going to be a blink of an eye and happen overnight. There's a lot of infrastructure that needs to be delivered, but that's, I believe, where we're going with stock trading. It's not fast enough today to trade a lot of the stuff that we're making markets on, but that's where it's going.
Unfortunately, that music means we're going home. We're done. The show is finished. We could talk another couple hours here, Tony and I, about all things crypto, but unfortunately, we are out of time. But before we go, Tony, I want to thank you for joining me. I can't think of a better person to join me for our inaugural interview, our inaugural guest segment here on the old Crypto Rundown program. And before we go, Tony, people are interested. They want to learn more about what you guys are doing over there at Mercury Digital Assets, or indeed, perhaps you want to leave them with a little bit of a hint, a little bit of a tease of what's coming down the pike from you and your team. Now is the time, sir. The floor is yours.
Well, just I think everybody should check it out. Check if you're not involved in digital assets to make your first purchase and try it out. I know that there's a movement. I'll share with you at another time a well-known name that I'm not really related to, but I know there's a movement to socialize Bitcoin to a greater degree that's happening. And if you're interested in what we're doing at Mercury, you can go to mercurydigitalassets.com or hit me up at AJ, as in Anthony Joseph, at mercurydigitalassets.com. My email, I'll answer all the email personally.
There you go. Hit the man up. He gave you his personal email. He may come to regret that because we have a very motivated audience. But get the man up. Take advantage of his generosity and learn more at mercurydigitalassets.com. And of course, I want to thank our friends over there at Acuna Capital as well. They'll be back on soon talking about all the flow they're seeing over there on their OTC options desk. Learn more about what they have going on over there. Maybe you want to check out a career for yourself. Acuna Capital. That's AKUNA Capital.com is the place to go to learn more. And on behalf of Tony and our friends over there at Acuna and indeed myself, I want to thank all of you out there for downloading, streaming, subscribing, for sending in questions, for listening live, all the fun stuff you guys do. Keep them coming, and we'll see you next week for more of the Crypto Rundown.
The Crypto Rundown is brought to you by Acuna Capital. Known as the new wave in tech and trading, Acuna is a leading derivatives market maker in traditional asset classes. As one of the first trading firms to make markets on Bitcoin futures, Acuna is also proud to be an innovator in the cryptocurrency space. Through a collaborative flow of knowledge between developers, quants, and traders, Acuna designs and implements their own low-latency technologies, trading strategies, and mathematical models. To learn more about our rapidly growing firm, please visit acunacapital.com. You're listening to the Options Insider Radio Network, the home of the Options Podcast. For more quality options programs, visit theoptionsinsider.com or search for Options Insider Radio Network in your podcast provider of choice. Listeners can also access all of our programming through our mobile app available in the iTunes and Google Play stores. Select programs are also available via live stream at mixlr.com/options-insider. That's mixlr.com/options-insider. Don't forget to follow along with your favorite programs and submit your own questions for the hosts at twitter.com/options, stocktwits.com/options, facebook.com/theoptionsinsider, or via questions at theoptionsinsider.com.